Hi there, welcome to Market Call. Our guest today is Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. And Kim will be taking your questions on technology stocks. There is the number to call, 1-855-326-6266, or send an email to marketcall@bnnbloomberg.ca. Great to see you, Kim. Thanks for joining us.
Great to see you, Andrew.
Tech stocks, maybe we could put up the NASDAQ 100 as a proxy, well off their highs.
But it's come back pretty well this week.
It has. No, that's right. Yeah. What is your outlook? I mean, is it a buy the dip occasion, if you can generalize?
I don't know. Last week it was sell the rallies.
Yes.
This week's buy the dips. Who knows what happens next week? I think, everyone always asks, what do I think for the end of the year, end of the quarters or whatever. This year is all about active management. So you've got to go with the flow, go with the momentum. Just like I said, last week was sell the rallies. This week is buy the dips.
So you think we're not really in danger, or it's the most likely scenario is that we go into a long, drawn-out decline in the tech stocks?
Well, if there was going to be some danger, I would have thought it would have happened already. And all you had was like a 5 or 6% pullback.
Mm-hmm.
When you start off at the beginning of the year with expectations of 6, 7 interest rate cuts down in the States, then it went back to 3 or 4, now probably 1 or 2, and some of them are even saying none until next year. So with that backdrop, it's pretty amazing that the stock market, particularly the NASDAQ, has hung in there. However, when you look at the Russell, it's a different story because they're a lot more interest rate sensitive for the smaller and mid cap. For the larger cap, yes, they have a lot of debt. Interest rates influence them, but they have cash flow. They have cash flow that's constantly going.
The smaller companies.
The big ones.
Oh, the tech companies.
Ones, yeah.
I'm sorry. Yeah.
Versus the smaller ones, which are very interest rate sensitive.
Mm-hmm. And the one good sign, though, is there signs of a fading investor bullishness. When people are too optimistic, that can be a sign of a toppy market. But it looks like investor sentiment has diminished a bit.
Right. In the outlook that I supplied you, there is this benchmark called the American Association II.
Individual investors.
Right.
Yep.
And that very much sort of shows when things get overheated and oversold. And so as of, if you go back a couple of weeks ago, it was overbought. And then the end of last week, it was oversold. So the pendulum just keeps swinging quicker and quicker. And you just got to keep your eyes on that overbought, oversold benchmark.
We're going to be back with Kim Bolton, Portfolio Manager at Black Swan Dexteritas. He'll be taking your questions on technology stocks, 1-855-326-6266. John is calling from London, Ontario. Go ahead, John, please.
Hello, Andrew, and thanks for having Kim on. I like to check in with Kim about every quarter because he keeps picking winners. The latest one was Altair. My question is on the Magnificent Seven. A number are reporting this week. Just wondering who's most likely to beat earnings and be a candidate for me to add to my position. Thanks very much.
Thanks. Actually, John, before we let you go, what was the stock that went up that you mentioned, that Kim mentioned? Oh, I missed it. What was it? Did you hear?
Was that Astera? I think it might have been Astera.
Oh, okay.
And we're going to talk
we'll move
about
on,
that
though.
later.
Anyway, he's asking about what jumps out for you right now in the Magnificent Seven. I don't want to step on your top picks, though.
Yeah. I think you could almost pick any of them, to be honest. Like, even Tesla was a bit of a surprise, and you have to have a lot of faith in the whole robo-taxi, FSD, and so on. But if I were to pick one that would be, that would stand out, I would have to say Google. I would say Google, and Google reports on Thursday, tomorrow. Today is Microsoft and IBM. They should do pretty well, but I think it'll be interesting, particularly with Google, in how they frame the whole Gemini. That's their AI version out there, because they had a bit of a stumble before, but it's come back into fads. So, John, I would look to add to Google. I'd have to look at all the price targets on it. I think one that has been sort of beaten up is Apple. Now, Apple isn't really going to spotlight their AI side probably until their virtual deal that they have coming up in June. So the one that has probably the most limited downside, I would say at this point, would it probably be Apple. So, John, I would add to both Apple and Google.
Okay. We have Joseph calling from Montreal. Go ahead, Joseph, please.
Hi there. Thanks for taking my call.
Thanks.
I want to get your opinion, Kim, on Netflix. They haven't quite rebounded after their fall last week or 2 weeks ago. And I was thinking for a long-term hold, RRSP or RESP. I like their efforts to try and reduce churn. So I think this could do well in the long term. But what say you? Thanks in advance.
Netflix.
Thanks, Joseph. The reason it sort of fell over there last week when they reported was because of the fact that they said, in a year from now, they're not going to be reporting new subscribers, which sort of puts some uncertainty. And of course, investors don't like uncertainty out there. But currently trading right around, $555-ish. We have a 12-month price target of $633, so it's still got a very decent runway. And besides which, it is the king when it comes to the streaming and also the content. And so, they have the two of them that go together very well. They've also, as a natural, they're talking more about the gaming side. Which I think is which will be a surprise. They acquired the rights to WWE's flagship weekly program, WWE Raw, and so they didn't really sort of talk about that so much last week. But I'd say you can certainly buy it here, and if you can get it down around $525, add another third, and then down closer to $500, the final third.
Oh, okay. So it's a little pricey right now for your taste?
Well, no, 12-month price target is $633.
Oh,
you've got $555, so you have a decent runway still.
Oh, okay.
Yeah.
Okay.
Yeah.
Arthur is calling from Vancouver. Go ahead, please.
Hi, my question is about Lumine Group. It's a spin-off from Constellation Software. I wonder what you think.
Thank you.
Thanks very much for the question. So currently trading right around, I believe, just above $36. It's pretty fully priced because the average analyst out there has actually a 12-month price target of about 33. Lumen got spun off from Constellation because it really became very much a mini Constellation because, they had acquired so many companies in that vertical that they play in, which is the communications and the media industry. Probably BNN Bloomberg uses a lot of their software businesses in here. But on the pro side, they got a strong track record of success, long-term focus, experienced management team, and a very, very sort of strong and sticky customer base. Sort of on the other side of it, the acquisition strategy is not as deep. They've done so many and not as well known as some of its competitors out there. But I would hold here right now. And if you can see it actually pull back into sort of the low 30s, I'd add to it on Lumen Group.
That's a holder. No, okay, we're going to be back with Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. 1-855-326-6266. Steve is calling from Winnipeg. Go ahead, please.
Yes, good afternoon, gentlemen. I'm a very, very long-time viewer of this excellent show since the days of ROB TV and Jim O'Connell.
Oh, okay.
Just an occasional caller, but I never want to miss Kim Bolton. So my question is on Lam Research with, as I understand it, its particular relevance to the ramp in the latest latest generation production of memory. But if that's not a good choice, perhaps Kim could recommend one of the other equipment makers such as Applied Materials or KLA-Tencor. Thank you very much.
So chip making equipment.
Thanks, Steve. Great question. You know, I would say there's maybe four, Steve, in this category of semiconductor equipment suppliers out there. You know, Lam, you know, they design, they manufacture the equipment, they refurbish, they service the equipment, and the equipment essentially for integrated circuit fabrication. It's Steve, it's almost like a coin toss. Actually, one other one that I'd throw in there is ASML, which is on the ultraviolet side, which has really carved out a nice niche in that semiconductor equipment side for the EUVs. But, you know, Lam Research currently trading at, I think it was around 890. We have a 12-month price target of 1,069, so it's got a decent runway in front of it. Reporting is going to be pretty soon. I don't know exactly the date because the last time they reported was back on January 24th. Unlike some of the other semi-equipment suppliers out there, these folks are very conservative, sort of like an ASML. And so you won't get surprised by Lam. You might get a little surprised by a KLA. But last time around, they beat on the top, they beat on the bottom, and they actually raised guidance, which was uncommon for some of these equipment suppliers out there. So, Steve, I think it's a good choice. The other one I'd suggest maybe a split because it's a little cheaper is the ASML. And ASML reported, I think it was last week, and they actually lowered guidance, but they certainly see a lot of the demand coming back in the second half. So I'd split it between Lam and ASML.
Okay. We've got Scott in Kingston, Ontario on the line. Go ahead, Scott.
Thanks for taking my call. Kim, I'm calling about Datadog or Datadog. I think you liked this stock a while ago. I did buy a third position a while ago. It dipped a while ago and then it came back up. When do you think, do you forecast the stock going up from here? And one thing I want to mention, you do always suggest buy a third and the second third at specific price points that are lower. What happens if the price doesn't go down and just goes up from there? Do you purchase additional? Do you average up? If you could answer that question as well, thank you.
That was a mouthful, Scott. So, Datadog. Yeah, I always recommend, especially when you get into something pricey like a Datadog, you know, it's trading at a 74 times price earnings. Versus,
and it's partly a cybersecurity company, is it? Or,
yeah, it's a software as a service platform,
sure,
and it allows automated infrastructure monitoring. I always refer to Datadog as sort of like the the lifeguard in the pool. And so they make the other software as a service platforms actually play nicely together. And it allows, but it monitors, it fixes any sort of issues. But as I mentioned, it's a little bit pricey, but that's because it doesn't have a heck of a lot of competition. And certainly in, the whole AI ecosystem, it is so competitive out there. There are so many, not only public, but private companies. But Datadog, it continues to have a very robust research and development that keeps it ahead. And so they primarily play within the hyperscalers, the cloud companies, the Googles, Microsoft Azure and AWS and so on. So right now trading at about 120, I believe. And I think if you could pick it up here down at 115 and then down just shy of sort of 108 and 109 would be a good spot. Now, Scott, you mentioned, what if it doesn't go down? These buying points are constantly changing, very much like the price targets. Sometimes we buy into strength. I remember at the beginning of the year, NVIDIA. We had a full position. We upwards of about 7.5% within the funds and the SMAs. And we actually took some profit because it was bumping up against the price target. And so, but then after they reported, we realized that the price target was much lower, and we actually bought into that strength. It doesn't often happen, Scott, that we'll buy into strength. But Scott, I would recommend, if you have any questions, just give us a shout and we can have a quick conversation or a text or whatever. We'll let you know how our price targets and our entry points are sort of changing.
I kind of lost track there. Datadog, then, would you be a buyer of those
Yes.
shares now?
And this is one of those stocks that we own in the fund and also through many of the separately managed accounts.
Elliot in Hamilton, Ontario. Go ahead, please.
Good afternoon, gentlemen. In its last quarter, Salesforce reported an excellent quarter with accelerated growth, went from 250 to the low 300s. It was pulling back, and I was hoping, fingers crossed, to get it back at 250 and get the whole quarter for free. Please, do you have an accelerated outlook for CRM, and what are your buy prices? Thank you.
Thank you.
Thanks very much for the question. Salesforce, this is a core holding, certainly in our fund and in a lot of the separately managed accounts that have a growth tilt to them. Currently trading, I think it's right around a little over 270. We have a 12-month price target of 330. So it still has, what is that, mid-teens runway in front of it. And so it's still a buy at this level. If you can see it pull back to, as you were saying, down into sort of the mid 250s is a great spot, and certainly into the mid 240s. It was a great opportunity over the last couple of, going back last week and the week before, when they were talking about, Benioff was actually talking about buying that Informatica, which was the data company. But it was going to be a bit of a price tag of just shy of $20 billion. And it, certainly got priced in as though they were going to buy it. The investor base wasn't impressed, and it was a great opportunity to actually buy in. So in these volatile markets, I certainly recommend that you sort of stick to your discipline of buying in those thirds. Not only buying into the thirds, but also as it approaches price target, we usually sell within 5% of price target, and then we sell at price target. And then the final third, we sort of reevaluate and say, hey, did we have the price target wrong? And we'll go from there.
Right. You're referring to Mark Benioff, the chair, CEO, and co-founder of Salesforce.
Yeah.
We're going to take a quick break. We'll have a look at Kim's past picks when we return. Kim was on our show June 7th of 2023. Now, the NASDAQ 100 is up about 22% since then, roughly anyway. So two of your picks underperformed, but one blew it away. So let's get to one that did lag. Analog Devices, a return of about 11%.
It's not so bad.
I mean, it's still up, yeah.
You know, analog just sort of flies under the radar, sort of like Dell, which we'll talk about, that blew it away. Because, you know, when you think about Dell, you think about, you know, they send you laptops and equipment and so on. But really, they had another division. But Analog Devices, you know, historically, when you think about analog devices, you think about analog signals. And analog chips are things that go in like refrigerators and washing machines and televisions where they're already programmed, right? Versus like digital or memory chips, which have a heck of a lot more flexibility and scalability and so on. But what analog has over the last year or so has really got into converter products that will translate analog signals into digital and digital into analog. And they're also into a lot of power management. And they have things like high performance amplifiers to try to break into the whole sort of AI sort of bricks and mortar side of it. Currently trading around 190, and we have a 12-month price target of 212. So, you know, it still has about a 10% lift from here on a runway. We still own it. It is sort of between Texas Instruments and Analog Devices. They're sort of the king when it comes to analog. But Analog Devices is very much transforming their business into, you know, that converter product side of it. So we still like it.
Okay. Still would stick with that one. Dell soaring, more than doubling over the period. Why did it go up so much?
Mainly because it was flying under the radar. You know, they have two sort of business units. They have the Infrastructure Solutions Group, which we'll talk about, which is really very much geared to the whole sort of AI revolution and ecosystem. And then they have this Customer Solutions Group, which is all about desktops and workstations and notebooks. And if you recall, even if you go back a year ago, you know, that whole segment of desktops and workstations and so on and laptops and so on was in a bit of a slum. And but then they had this group, and you know, this is what we looked at a year ago. So they have this Infrastructure Solutions Group, which is the hardware that is required in the hyperscalers like the AWS and the Microsoft Azure. And so they supply the storage solutions and the all-flash arrays and the hyperscale converged infrastructure. Anyway, it was all the infrastructure that had to go into the hyperscalers to allow all of the AI to be processed in there. So it was sort of a natural. They really geared it up, and it's, you know, it's up 2.5 times. If you go back about a month ago, it was up 3 times, and we've stuck with it along the way. So right now, currently trading around 121. We still have a 12-month price target of 135.
And your final idea, we are tight for time, Monday.com, another of these workplace software, workflow software companies?
Yep. This is another Israeli company. And so what they're known for is low-code, no-code technology. In other words, it's for non-developers, non-engineers that can actually... Now, they initially got into their software as a service of project management, but then they've expanded that into marketing and operations and human resources and finance. So right now, We love this stock. We have it spread across a lot of our portfolios. Currently trading at about 184, even 185. We got a 12-month price target of 266, so it has a good long runway. Love to talk more about it.
Okay. Kim Bolton is our guest today. He's taking your questions on technology stocks, 1-855-326-6266. Let's go to Moaz in Vancouver. Go ahead, please.
Good afternoon, gentlemen. Great show. Kim, I never missed your show.
Thank you.
I have a question about KLA Corporation, which you mentioned briefly a little while ago. I noticed that its price has dropped suddenly. Should I hold it or wait for it to recover or sell it?
KLA, and that's another of these chip equipment companies?
Yeah, manufacturers, suppliers, servicers of semiconductor equipment. Moaz, thanks very much for the question. Moaz, we don't own it. We like Lam. We certainly like ASML. I would. If I were you, Moaz, I would take profit on half of it up at this level and use the proceeds to actually buy into ASML, which has really rolled over because of the weaker guidance. But it's very sort of cyclical on the calendar year for those ultraviolet equipments. But that's what I'd recommend. It's a great company. It competes very, very well with Lam Research. But I'd take a little bit of profit and put it over into ASML. Hope that helps, Moaz.
Oh, okay. We have John in Thornhill on the same subject. Thornhill, Ontario. Go ahead, John, please.
Hi. My question was on ASML and if you what your target is, and it sounds like you're positive on it. So I'll hear your rest of your thoughts. Thank you.
Okay, so just remind us, well, what's special about ASML or what's distinctive?
Yeah, honestly, I didn't know that ASML was coming up after KLA, but a sort of opportunity. So ASML, they're a semiconductor equipment supplier. And certainly semiconductors is a big thing this year, and well, for many, many years, but certainly within the AI revolution. And you know, they're not as dependent, of course, on the designers that have to go and get in line with Taiwan Semiconductor to get their chips built. But ASML, you know, they develop and service advanced semiconductor equipments consisting of lithography, metrology, and inspection-related systems for memory and logic chip makers. So in layman's terms, their machines do etching with ultraviolet rays, and that's what they for the chips, and so that's what they sort of hang their hat on. They reported, I think it was last week or the week before, and as I mentioned, they actually lowered they blew it up on the. They broke through on the top line, the bottom line, but then they lowered the guidance. And it was mainly because of their order book, but they saw their order book coming back in very, very strong in the second half of this year. So this is a great example of where you get an opportunity to actually buy a fantastic company in this sort of whole AI revolution at a cheaper price. I
see Bloomberg there just a couple of days ago here's the headline. ASML is behind the most important tech in the world right now, extreme ultraviolet lithography.
Yeah.
And they're asking the question, how did Intel miss out on this?
You know, certainly in the semiconductor business, it's like a big tanker on the ocean, and it's really, really hard to sort of change course. ASML, a Holland company, sort of a Holland-German company, they hung their hat on this ultraviolet etching. And so it proved to be, the cat's meow out there. But then
we better keep going.
But they so currently trading at 850,
Sure.
and we have a 12-month price target of 1,070.
Okay, thanks. The cat's meow. I love that expression. Costa in Montreal, go ahead, please.
Great show. Thank you so much for taking my call.
Thanks.
Mr. Bolton,
Yes.
what are your thoughts about Shopify going ahead this year? Do you currently own it in your portfolio? And a price target? Thank you so much.
Yep. Thanks, Costa. So currently trading around 71. Got a 12-month price target of $82. But this Shopify is off 60% off its highs, as you probably know, Costa. It's a one-stop e-commerce as a service platform, 175 countries, caters mostly to small and medium-sized companies. Companies like Nike and Shave Club and Banana Republic, Authentic Brands, Tim Hortons, but this is the kind of stock that we find. Yes, it is in our portfolio. It's in a lot of our separately managed accounts. But this is the one that you have to actively manage. And you can trim it and add to it. And that's how you can actually add some alpha into it. But yeah, Costa, we got a $82 price target right now.
82, so it's 99 right now, but roughly,
I'm
sorry.
sorry, that's the U.S.
Oh, U.S.
Sorry.
Okay,
So on the U.S. side, it's currently trading at 71, just over 71 U.S.
Okay.
Sorry for the confusion.
Sure, yeah.
And in U.S. dollars, 82, which would be
That's your target.
approximately, probably about 109 Canadian. Yeah.
We'll be back with Kim Bolton. He's taking your questions on technology stocks. Sam is in Toronto. Go ahead, please.
Hi. This NVIDIA stock has gone down about 15%, Do you think is it a buy at this price? And what is your target, please?
NVIDIA.
Oh, you should be thankful that it went down 15%. If there is a poster child in this whole AI revolution that will remain a poster child for at least the next year and a half, is NVIDIA, because they have such a franchise and a leadership ahead of the competition when it comes to those accelerator chips. And it's not just the chips, but it's also the packaging. But then, they've used the currency that they've earned over the last year. They've gone from, from what was it, $900 million market cap a year ago to $2.5 trillion.
Right.
But they've used that currency to actually invest outside of their own domains. So they have, very much like a lot of the other so-called Magnificent Sevens, that have sort of place markers in other companies that will help them outside of their own sort of internal. So currently trading, around just over 800. We still have a 12-month price target, and we've had it for a while, of 975. It is one of the greatest secular stories in the whole semiconductor business, riding on the whole transition. It's a phenomenal job that they've done, because, if you remember back, I think it was back in 2016, they bought Mellanox. Mellanox are the guys that actually were the brains behind this whole AI accelerator chip that they had coming up. So not just look at who they are and what they've done to date, but look at what they actually have in their quiver, going forward. And we just love this company. We have, in most portfolios, we've got somewhere between 5 and 7%. And actually, for the ones that were down at 5%, that pullback of 15% was a gift to actually add to it.
Do you love it? Okay. Duke is in Markham, Ontario. Go ahead, please.
Yes.
Go
Hi.
ahead.
Yes. I really enjoy your show. I just have trying to get some questions regarding the Zscaler. Is it going to be a buy, hold, or sell?
Okay.
Thank you very much.
Thank you. So that's Zscaler or Zscaler, the IT security company?
Depending on which side of the border you're on.
Yes.
So Zscaler it's a cloud-native cybersecurity company focused on connecting the right user to the right app on really any network. So they provide this internet access solution to users and servers and so on. And you can see how that they're really part of this whole AI revolution out there. So currently trading, I think, right around 176. It's popped quite a bit this week. And we have, Duke, we have a 12-month price target at 245, so it has a great runway in front of it.
Okay, John is in Montreal. Go ahead, John, please.
Good afternoon to both of you gentlemen.
Hi.
My question's on art media. They're in the AI arena, involved with robots and holograms. Can you tell me if they're in the right part of artificial intelligence? Because their stock is a fledgling penny stock, and they haven't really moved, but I think they're in the proper end of artificial intelligence. Do you like it? As I say, is it still worth holding? And could you give me the latest info on it? Thank you.
Thank you. So these people, they do these virtual meetings, don't they? With
holograms.
Yeah, right. Okay.
So 3-dimensional holograms that, and it's currently trading 5 cents. If you go back a year ago, John, as you probably know, if you own it, it was trading sort of around 12, 13, 14 cents. But it's just sort of fallen off the radar. And it's such a shame because I've met with Larry O'Reilly, who's the CEO. He actually came from IMAX many moons ago. And they have a great shop if you ever have an opportunity. And if you're up at Yorkdale, they're just across from Yorkdale Shopping Center. Go in and check them out. They're very, very cutting edge. They originally had a very, very expensive hologram product, then they cut it down in price, but it's still a little bit pricey. Surprised they, a lot of the pharmaceutical companies use it around the world where they want to bring, their scientists and engineers and management together, and they can do it on these holograms. It's certainly fascinating to watch. But John, it's just, it's too bad. It's a great Canadian story, but it's just sort of fallen on the wayside.
Okay. We are out of time for your questions today. Thanks very much to everybody who called in. Apologies to those who couldn't get through to Kim. We're going to get his top picks coming up. First idea, Astera Labs. Now, this may have been the one that the caller referred to at the beginning of the show, thanking you for referring us to it. What are they all about? Why do you like it?
Well, they just did an IPO back beginning of March, I think it was.
Okay.
So it was priced at 32. It opened at 58, and it shot all the way up into the 80s. But with the retreat of the market last week, it actually got down into the low 60s, and it was a bargain down there. Still at this level, we still think it's a bargain. So, what do? And actually, all three companies that I'll talk about are all about communication as a service or infrastructure as a service. So you've already got like the infrastructure and the hyperscalers in the cloud companies, right? And now you have all of these software companies that are coming out with certain different ways of processing the data. But what Astera does is that it allows the different software companies to actually connect their solutions very quickly with the cloud and with other software and with other networks out there. So it's a very data-centric company. And so it's an Israeli company. We have one of our analysts is in Israel. He knows these guys inside out personally too. So it's all about high-speed connectivity, leveraging all kinds of technologies within the cloud. So we really like this company. Currently trading at $70. We have a 12-month price target of $86, but you can be sure that is going to be raised as it sort of gets toward 86. It flies under the radar. I would recommend that you invest in it. Put in, I don't know, somewhere around 3, 4, 5% of your portfolio on something like this. And I think you'll be very, very well rewarded.
Your next idea is Marvell Technology.
Yep. So Marvell, again, still in the semiconductor side. But remember when, and you've seen it, Andy, around the city where they were digging up the roads and they were replacing copper wires with the optical wires, right? And so Marvell actually got on top of this, and they brought semiconductor solutions that were very, very much geared toward the optical cables. Now, a lot of other people, but they were the first one on it. The other thing that Marvell is very well known for is the system-on-a-chip architecture, which is geared toward edge computing. So you have the data center over here, and then the data center sends out the signals into the various devices, the phones and the laptops and so on, out in the periphery. But what Marvell does is that they actually have these system on a chip that actually go right out to the edge. So they actually have the processing power right on the edge in the devices. So that's sort of the layman's version, but it's a leading designer. It's been around for a long time. Developer, supplier to integrated for high-speed communication, i.e., the optical side. So currently trading, I think, around $64. We have a 12-month price target of $75.
And then your final idea, Broadcom.
Yep. We're sort of going from very small to large. Broadcom, the symbol ABGO is because of the company that they bought back in the late teens, 2018, 2019. They're a massive company, almost 600 billion market cap company, currently trading at 1,250. Yeah, and we have a 12-month price target of $1,573. Now, 3/4 of the revenue come from semiconductors, and a quarter of it comes from infrastructure software. On top of that, they actually have a 3% dividend. They've been around this was an offshoot, if you go all the way back to the 60s, from Bell. And so...
Ma Bell in the States.
Yeah, Ma Bell, yeah. So it's involved in everything from system on a chip to cable, digital line, optical, Ethernet switching, routers, and so on. So they're as you can see on the semiconductor side, they're very, very much on the hardware side. So I'll leave it there, but for those that I'm sorry I didn't get to answer your questions, please just give us a call at Black Swan Dexteritas.
Thank you very much. Kim Bolton, the one and only. Let's have a very quick look at the markets before we go. We'll start off with the US benchmarks. They have slipped, although after 2 straight sessions of gains, after a ugly week last week, it looks like investors just cooling their jets a bit. We did see bond yields moving up, and we are looking for an auction of American government bonds this afternoon. Apparently that could be putting pressure on stocks. Tesla, of course, surging. Meta is due to report results after the market closes, and then Microsoft and Alphabet set to report their quarter tomorrow. Thank you very much indeed for watching Market Call. Robert Gill is up tomorrow.